Hello class, this is Demetrius Wilson for Managerial Accounting, Chapter 1. This is the first of 9 lectures that you'll have, PowerPoints that will be posted to TalentNet that you can access at any time. So we'll start off with Managerial Accounting. And what is Managerial Accounting? Typically you'll have Managerial Accounting or Financial Accounting, and you'll learn that managerial accounting is used typically by managers, directors, VPs to make internal decisions versus financial accounting, which is what is reported outward and held to the standards of the GAAP or generally accepted accounting principles. So we're going to compare characteristics of financial and managerial accounting, and I'll show you guys a little later that there'll be videos, not from myself, but from other individuals that kind of compare and contrast the differences between the two as well. So what is the focus of managerial accounting? It's for internal users, as I stated, and it's for decision making. It's the way that a company does their internal accounting and which they use that information in order to make internal decisions. What are the characteristics of managerial accounting? Focus on future projections, staffing, right? Do we need 10 customer service reps or do we need 15? Does not need to conform to the US GAAP, as I stated earlier, the generally accepted accounting principles. Data is detailed and it includes non-financial measures. So there are a lot of non-financial things, well not a lot, but there's some non-financial things that will be included when you are dealing with managerial accounting, but not in the case of financial accounting. So how does managerial accounting differ from financial accounting? Well, let's see. Managerial accounting inside the organization, financial accounting is outside. Accounting rules, there are none for managerial accounting, but you should probably adhere to some guidelines unless you want very wacky accounting. For financial accounting, the U.S. Generally accepted accounting principles. Time horizon for managerial accounting is future projections, sometimes historical in detail. And for financial accounting, it's historical information. So it's reporting back what occurred, typically reporting outward. You'll see a lot of that when you have to report how a publicly traded company did, things of that nature. So level of detail for managerial accounting often presents segments of an organization, right? Products, divisions, departments, right? I work for a company that has various divisions, and so that managerial accounting will report on how each of those divisions are doing. Financial accounting presents overall company information in accordance with U.S. generally accepted accounting principles. Performance measures, financial and non-financial for managerial accounting, and financial accounting is just primarily financial. So we're going to describe the planning and control functions that managers perform. And planning and control are two major components and functions of managerial accounting. So what is the planning function performed by managerial accountants? So planning is the process of establishing goals and communicating them to employees. Our goal is to sell 5,000 widgets this year, and we communicate that to our sales staff. Then that dwindles down to the other individuals who have to support the sales staff in those 5,000 sales, and we need 10 to hire 10 more customer service reps to do customer service for those sales that were made. A budget is often used to plan for the future, right? So we set our budget together and we plan for the future. This is how many individuals we need to pay for. This is how much their health insurance will cost. All kinds of different things that come into play when you're dealing with managerial accounting. Examples of budgets include budgeted income statements, capital budgets, and cash flow budgets, all of which we will go over during the course. So what is the control function performed by managerial accountants? So control is the process of evaluating whether the organization's plans were implemented effectively, right? So at the end of the year, at the end of the quarter, at the end of the month, we always go back and say, what did we do right? What are our wins? What did we do wrong? What can we improve upon? The process involves comparing actual results to the budget, right? So our budget was for $100,000 and we actually spent $110,000, so we're over budget. Our budget was for $120,000 and we only spent $80,000, so we're under budget. And what can we do and use that money in a wise manner as a company? Can lead to changes and improvements in the future, right? Because we want to see what we did well and improve upon that, accentuate the positive, and we want to see what we didn't do well and eliminate that, eliminate the negative. So describe the functions, key finance, and accounting personnel. Right. So, what does the typical organizational chart look like? And this is, you have to understand that all organizations are different, right? And this is just an example of what a standard organization could look like. So you have your board of directors that is at the very top. A lot of people think, oh no, isn't the CEO at the top? No, the board of directors is right there at the top. The chief executive officer or CEO is there, vice presidents, and you could have your vice presidents of various departments. So it could be vice president of customer service, vice president of sales, vice president of this, vice president of that. Then if you look on the right side, that shows you that the accounting structure. So you have your CFO or your chief financial officer, and who reports to them. You have your controller, the treasurer, and the internal auditor, right? And you see that the auditor is kind of out there to the side by themselves because they can't really be closely aligned with anybody because they're doing the auditing. Managerial accountant, financial accountant, and tax accountant. And at some point in your career, you may end up being in one of those positions. So who are the key finance and accounting personnel, and what do they do? So the chief financial officer oversees the organization's finance and accounting functions and reports to the chief executive officer, right? So CFO reports up to the CEO. A controller responsible for the accounting staff and reports to the CFO. The treasurer responsible for obtaining financing, right? So you need financing for certain projects, projecting cash flow needs, how much money do we need, and managing cash, and reports to the CFO. And the internal auditor responsible for confirming that the company has controls that ensure accurate financial data and reports to the CFO, right? So that's someone who dots a lot of T's and crosses a lot of I's, as they say, right? Use standards of ethical conduct to resolve ethical conflicts facing accountants. Right. So one of your assignments this week is going to be to write about ethics in accounting, and we've seen a lot of people do a lot of unethical things just recently in the last 10 years, and it's probably been going on much longer than that. It's just that nobody's really uncovered it. So why is it important to learn about resolving ethical conflicts? Within the last decade, fraud has occurred at several large companies. So examples are Xerox, Enron, and WorldCom, super huge companies. The two latter companies nowhere around, but Xerox is still here and still doing well. So what happened at Xerox Corporation? They used fraudulent reporting to overstate revenue by 3 billion. Well, why would you overstate revenue? You typically going to overstate revenue so that more people can invest money in your company. It looks good for the investors. Accountants recorded revenue on copier and printer leases early, and 6 executives settled fraud charges by paying fines totaling $22 million, right? How would that hurt your pocketbook if you had to pay up to $22 million? So what factors tend to cause fraud? So shareholder expectations for a company to meet sales and profit goals, right? So we have to meet these sales goals, have to meet these profit goals, right? So just like in any other organization where you have salespeople, they have to meet a certain goal. So maybe the ethical standards that they abide by kind of fall by the wayside. The corporate culture that profit targets must be met at all costs, right? We need to hit this profit. Whatever you have to do it, whatever you have to do to get there is what we need to do. Employee compensation is tied to financial targets. So if your paycheck is tied to those financial targets, then you're going to say, okay, well, if it's either me or them, then it's going to be me, and I'm going to do what I need to do in order to make these sales. So what are the core principles described by the IMA Statement of Ethical Professional Practice, which is in your book? Honesty, right? Tell the truth. Fairness, be fair to others and to all. Objectivity, right? So be objective. Don't only be consumed by what your stance is. And responsibilities, corporate responsibility, social responsibility, internal company responsibility. What are the standards described in the IMA Statement of Ethical Professional Practice? The four standards are competence, right? Especially if you're somebody in a field like if you're a doctor, if you're a lawyer, if you're an accountant, you need to be competent. You need to know exactly what you're talking about, what you're referring to. Confidentiality. In all three of those as well, you need to be an individual that doesn't really talk about their work with anyone else. You need to keep certain things confidential, have integrity, and have credibility as well. Violation of these standards can result in disciplinary action, and they should. So what does IMA recommend accountants do to resolve ethical conflicts? Follow the organization's established policies, discuss the ethical issues with your immediate supervisor, unless that person is involved, right? In that instance, you're going to have to use your common sense that you're going to have to go to someone else. Submit the issues to a higher management, might include the CEO, audit committee, or the board of directors, and discuss the issue with the IMA ethics counselor and consult your attorney, which hopefully it doesn't come to that, but sometimes it does. So we want to understand how accounting systems can help organizations, right? Is this something that we really need, or can, we just do away with it? But, in my opinion, it's something that we really need because budgets, whether it be financial or managerial, tend to get out of line unless somebody's actually managing it or controlling it. So how do companies determine what type of computerized accounting system is needed? We'll kind of try and get through this pretty quickly because it's not something that I want to spend a lot of time on. But you determine it by the size of the organization and the information that's needed by the organization, right? So if you have a huge organization, then you probably need some huge type of computerized accounting system. So what is enterprise resource planning system? And this would be that huge type accounting system. Designed to record and share information across functional and geographical areas, provides real-time data to users, often for decision-making purposes. Data can be organized in different form. You can go ahead and read the rest. I'll tell you, if you have a smaller company, you definitely do not need enterprise resource planning system. So what does a downloaded Excel spreadsheet for Southwest Airlines look like? So this is just an example for you, but it's a good example because it shows the operating revenue for passenger, freight, and others. Shows people's salaries, wages and benefits, fuel and oil. So unless you own a company or you know someone who owns a company, you may not understand all of the things that a company is responsible for and all the things that they have to pay out, right? So if I'm thinking about hiring somebody, I have to not only think about the salary, but I also have to think about how much I'm spending on benefits, right? So you have wages, but you also have benefits, right? So you have to take certain things into consideration. So we want to understand terms used for accounting purposes. So what are manufacturing costs? All costs associated with production, right? So anything associated with producing something, that's a manufacturing cost. Includes direct materials. So let's say we're building a desk, those direct materials are going to be wood. Direct labor, and we're still dealing with that desk. It's me, John Johnson, the individual who makes the desk. And manufacturing overhead. And we'll discuss in the next few slides exactly what falls under the manufacturing overhead category. But these manufacturing costs, they're also called product costs. So what is included in direct materials? Raw materials used in production process that are easily traced to the product. So if I make a desk, wood is easily traced. Glue, not so much, not easily traced. Example is direct materials for custom wood tables include the wood and the hardware. Those are things I can easily trace. Direct materials do not include small, inexpensive items such as nails or glue or lacquer or things of that nature. These are included in manufacturing overhead. So what is included in direct labor? So it's the cost of workers who convert materials into a finished product and whose time is easily traced to a product, right? So if I create the desk, I'm John Johnson, I create the desk, my direct labor is easily traced to the product. But if there's a supervisor who supervises my department and another department, their work and their time and their wages is not easily or directly traced to the creation of that desk. So that's not the same as direct labor. That's going to fall under indirect labor, which we'll discuss later. It's typically made up of assembly line or production workers. What is included in manufacturing overhead? All costs associated with production other than direct materials and direct labor. Includes items such as factory rent, factory utilities, and factory equipment maintenance, right? So I have to pay to stay in this building. Like let's say this square in front of me is my building. I have to pay for that. I have to pay for the electricity, for the lights and all that. And then also the maintenance of the equipment. Includes indirect labor and indirect materials, production labor, and materials not easily traced to products like the inexpensive glue, and also the individual who's managing different departments. This is the end of section 1, but we're going to have another video, and that's going to be section 2 of chapter 1. So stay tuned.